A foreclosure notice arrived taped to my mother's front door on a Thursday afternoon, informing her that she had 60 days to vacate the house she had owned, free and clear, for 31 years. The same house my father built additions onto with his own hands, the same house where I grew up, the same house my mother had told me, as recently as 6 months earlier, was completely paid off and mine to leave to you kids someday. My mother called me in a panic, reading the notice's language aloud over the phone, neither of us initially able to make any sense of what we were looking at, because as far as either of us understood, there was no mortgage on that house at all, and hadn't been for over a decade. It took me 3 weeks to discover that there was, in fact, a mortgage, a reverse mortgage, taken out roughly 18 months earlier, in my mother's name, against a house she genuinely believed was entirely mortgage-free. A loan that had, according to the paperwork I eventually obtained, been originated by a loan officer my younger brother, Patrick, had personally arranged, with proceeds totaling just over $310,000 dispersed in a single lump sum. Deposited into an account my mother had no independent knowledge of or access to, an account Patrick controlled entirely, and had, by the time the foreclosure notice arrived, almost completely drained. If you're new here, welcome to Family Hidden Fight, where we tell you the truth about the wars fought behind closed doors, inside families, including, in today's story, a war fought through paperwork so genuinely complex that my own mother signed away the deed to her own home without ever fully understanding what she was actually signing. Today's story is called The Mortgage That Ate the House. Let's begin. My name is Catherine Doyle Simmons. I'm 44 years old. I work as an elementary school principal outside Cleveland, and my mother, Eleanor Doyle, is 78 years old, a retired hospital administrator who has lived in the same house outside Akron, Ohio, since 1993. The house she and my late father purchased together, raised my brother and me in, and paid off entirely, according to everything I had always understood, roughly 12 years before this story begins. My father, Thomas Doyle, died 6 years ago of complications from congestive heart failure, leaving my mother a widow in a home she owned outright, with a modest but genuinely sufficient pension and Social Security income that, combined, provided her a comfortable, if unremarkable, retirement. The kind of financial stability my parents had spent their entire working lives carefully, deliberately building. My younger brother, Patrick, 40 years old, has, over the years since our father's death, taken on an increasingly central role in helping our mother navigate the ordinary logistics of widowed life, home maintenance, occasional errands, and I had always understood general practical support given his own closer geographic proximity, living roughly 20 minutes from our mother's house, compared to my own 3-hour distance. I want to be honest, before continuing, that Patrick's relationship with money throughout his adult life had always been, to put it gently, considerably less stable than my own. A pattern of financial difficulty stretching back to his 20s, involving several failed business ventures and what I understood, at various points over the years, to be genuine, ongoing struggles with debt. I had, throughout this period, occasionally worried, in a vague, unfocused way, about Patrick's own financial stability. I had never once, until this specific story began, worried about what that instability might eventually mean for our mother's own financial security. I want to describe my mother's specific, disoriented state when she called me that Thursday afternoon, reading the foreclosure notice's language aloud over the phone, because I think it illustrates something important about how genuinely confusing and disorienting this entire situation proved to be, even in its earliest hours. "Catherine, I don't understand any of this," my mother told me, her voice carrying a specific, frightened confusion I had rarely heard from her throughout my entire life. "It says something about a reverse mortgage and missed payments and a 60-day notice to vacate. I've never taken out a mortgage on this house. Your father and I paid this house off years ago. I don't understand how any of this is possible." I drove to my mother's house that same evening, and together, we spread the foreclosure notice's full documentation across her kitchen table, trying to make sense of language neither of us, at that point, had any real familiarity with terms like home equity conversion mortgage, HECM, references to an original loan origination date roughly 18 months earlier, and most disorienting of all, a signature on the original loan documents that appeared, at first, unmistakable glance, to be my mother's own. "I don't remember signing this," my mother said, staring at the signature page, her voice carrying a specific, genuine uncertainty that I want to describe honestly, because it introduced, even in that first evening, a genuinely difficult and disorienting question that would take us weeks to fully resolve. Was my mother's own memory failing her in some way regarding a genuine transaction she'd simply forgotten the details of, or was something considerably more concerning actually happening? I want to pause and explain, as clearly as I eventually came to understand it myself, exactly what a reverse mortgage actually is and how it works, because I think understanding this specific financial product's genuine mechanics matters enormously to understanding both how this fraud was structured and why it proved so genuinely difficult for my mother to fully recognize what she may have actually agreed to. A reverse mortgage, most commonly structured as a federally insured home equity conversion mortgage, allows a homeowner aged 62 or older to borrow against their home's equity, receiving funds either as a lump sum, a line of credit, or ongoing monthly payments, without any requirement to make monthly mortgage payments during their lifetime, provided they continue living in the home as their primary residence and keep up with property taxes, insurance, and basic maintenance. The loan, plus accrued interest, becomes due only when the homeowner permanently moves out, sells the home, or dies, at which point the home is typically sold, with the loan proceeds repaid from the sale and any remaining equity passing to the homeowner's heirs. This financial product, I want to be clear, serves a genuinely legitimate and, for many seniors, genuinely valuable purpose, providing access to home equity for people who are otherwise house-rich but cash-poor in retirement. The specific vulnerability it creates, however, and the one that Patrick's scheme deliberately exploited, involves the ongoing requirement to keep up with property taxes and insurance, an obligation that, if unmet, can trigger default and foreclosure, even though no traditional monthly mortgage payment was ever required in the first place. I want you to understand exactly what likely happened here. A reverse mortgage specialist I eventually consulted, a woman named Diane Castellano who worked independently, unaffiliated with any lending institution, explained to me once I began investigating our situation more formally. Someone took out this loan in your mother's name, received the full lump sum disbursement, and then, critically, never used any portion of those funds to continue paying the property taxes and insurance the loan requires to remain in good standing. That failure, over time, triggered exactly the kind of default and foreclosure proceeding your mother is now facing, even though she never missed a single traditional mortgage payment, because there was never a traditional mortgage payment required in the first place. I want to describe the specific, mounting evidence that began pointing toward Patrick's direct involvement over the following several days, as my mother and I worked to understand exactly how this loan had originated in the first place. The loan documentation listed a specific loan officer, a man named Gregory Vance, working for a mortgage company neither my mother nor I had any prior familiarity with. When I called the company's customer service line, seeking basic clarification about the loan's origination process, I was informed, after some initial difficulty navigating their verification procedures, that the loan's origination file listed a specific contact phone number for ongoing communication regarding the loan. A phone number that, once I finally obtained it through my mother's own formal, verified request as the borrower of record, I recognized immediately as Patrick's own cell phone number. I want to describe the specific, sinking realization of seeing that phone number, understanding, with mounting and genuinely painful certainty, that my own brother had apparently been the primary point of contact throughout an entire loan origination process that had resulted in our mother's home now facing foreclosure, a process my mother herself had no clear, complete memory of having genuinely, knowingly participated in. I confronted my mother, gently, about this discovery, asking whether she had any memory of Patrick being involved in any kind of financial paperwork over the preceding 18 months. "I remember him bringing some papers by for me to sign, at some point," my mother said, slowly, working to reconstruct a memory that had clearly not, at the time, registered as anything particularly significant or concerning. He told me it was something related to updating my homeowner's insurance, something about a policy review that would help lower my premiums. I don't specifically remember anything about a mortgage or a loan. I trusted him completely. I didn't read through every single page as carefully as I probably should have. I retained an elder law attorney, a specialist named Robert Hastings, who explained, during our first consultation, the specific legal framework relevant to a situation involving a reverse mortgage, potentially obtained through fraud or misrepresentation regarding its actual purpose. I want to walk you through what we need to establish here, Robert told me during that initial meeting. If your mother genuinely signed these loan documents without understanding what she was actually signing, believing, as it sounds like she did, that she was signing something related to an insurance policy review rather than an actual reverse mortgage origination, that raises a genuinely serious question about whether her consent to this loan was legally valid at all. Reverse mortgages carry specific, federally mandated disclosure and counseling requirements precisely because of how genuinely complex and potentially confusing they can be for borrowers, particularly elderly borrowers who might not have significant prior experience with this specific, unusual category of loan product. Robert explained that federal regulations require any borrower obtaining a HECM reverse mortgage to complete mandatory, independent counseling with a HUD-approved housing counselor before the loan can be finalized, a requirement specifically designed to ensure the borrower genuinely, fully understands the loan's terms and implications before proceeding, entirely separate from whatever the loan officer or any family member involved might tell them. This requirement is going to matter enormously to our case, Robert told me. If your mother genuinely completed this required counseling, there should be a documented record establishing what she was told and what she understood at the time. If that counseling process was somehow circumvented, or if the documentation suggests it occurred in a way that didn't actually provide genuine, independent understanding, that becomes powerful evidence supporting a claim that her consent to this loan was never actually valid. Robert's investigation, working through formal document requests to both the lending company and the specific HUD-approved counseling agency listed in the loan file, obtained records that revealed a genuinely significant, concerning detail. The required counseling session had, in fact, occurred, according to the agency's own records, but had been conducted, per those same records, primarily over the phone, with the counseling agency's own file notes indicating that the borrower's son was present throughout the session to assist with hearing difficulties and to help facilitate the borrower's understanding of the material. I want to describe why this specific detail proved genuinely significant to our eventual case, because it illustrates a particular, concerning vulnerability within the reverse mortgage counseling requirement's actual, practical implementation. I want to be honest that this detail is both helpful and concerning for our case, Robert explained, once we'd reviewed these records together. It's helpful because it establishes that Patrick was directly, actively involved in facilitating the exact counseling session, specifically designed to ensure your mother's independent, genuine understanding, which supports our broader argument that he exercised significant, potentially improper influence over how your mother actually understood the transaction. It's concerning because it means the counseling agency has documentation suggesting a legitimate counseling process occurred, which we'll need to work considerably harder to demonstrate was actually compromised by Patrick's active, facilitating presence, rather than the genuinely independent process the requirement is actually designed to provide. Robert's continued investigation, including a direct interview with the specific counselor who had conducted the session, revealed additional, genuinely useful detail. Counselor, a woman named Susan Pham, described, once directly asked about the specific session, a vague but genuine recollection of a son being present and helping his mother understand some of the more technical terminology. A detail that, once formally documented in Susan's own sworn statement, became an important piece of evidence supporting Robert's broader argument that my mother's actual, independent understanding of the loan's true nature and implications had been genuinely, materially compromised by Patrick's active involvement throughout the entire process. Alongside the question of how the loan had originated, Robert's investigation, working with a forensic accountant, Marcus Webb, a name I want to note, with some genuine, dark amusement, coincidentally shared with the fraudulent recovery specialist featured in an entirely different story on this channel. A coincidence that speaks, I think, only to how common that specific name happens to be, rather than any actual connection between these two completely separate cases. Trace the actual disposition of the $310,000 loan proceeds, working to establish exactly what Patrick had done with funds that should have, at minimum, been used to continue paying the property taxes and insurance the loan required to remain in good standing. Marcus's investigation revealed that the funds had been deposited into an account technically held jointly in my mother's and Patrick's names. An account my mother had, according to her own account, opened at Patrick's request roughly 2 years earlier, believing, at the time, that it represented a modest joint savings account intended to help him get back on his feet, following one of his periodic financial setbacks, an account my mother had never closely monitored. Trusting Patrick's own management of whatever modest funds, she'd understood herself to be contributing to it periodically. The reverse mortgage's full $310,000 lump sum disbursement had been deposited into this same joint account roughly 18 months earlier, and Marcus's forensic tracing established that the vast majority of these funds, roughly $275,000, had been withdrawn or transferred by Patrick over the following year, directed toward a combination of his own accumulated personal debts, a failed investment in a friend's business venture, and a series of increasingly large cash withdrawals. Marcus's investigation was unable to trace to any specific, identifiable purpose. Critically, none of these funds had been used to pay the property taxes and insurance the reverse mortgage required to remain in good standing. An oversight, or more likely, a deliberate choice, that had, over the following 18 months, accumulated into exactly the default that ultimately triggered the foreclosure proceeding now threatening my mother's home. I want to describe my confrontation with Patrick, once Robert and Marcus's combined investigation had established this full picture, a conversation that occurred at his own apartment, roughly 5 weeks after the foreclosure notice had first arrived. "I need you to explain to me what you did with Mom's house," I told him, without significant preamble, once we'd settled into an increasingly tense conversation. "I have the loan documents, I have the counseling records showing you were present for the entire session, and I have a forensic accountant who's traced almost the entire $310,000 to your own debts and failed investments. I need you to explain to me why my mother is now facing foreclosure on a house she believed, until 3 weeks ago, was completely paid off." Patrick's reaction, over the following difficult hour, unfolded through a sequence that will, by this point in this channel's broader catalog of similar stories, feel genuinely familiar. An initial attempt to minimize and reframe, characterizing the loan as something he genuinely intended, to eventually explain fully to our mother and to me, followed by an escalating acknowledgement of the actual, deliberate scope of what he'd done. Once the specific documentary evidence made continued minimization increasingly difficult to sustain. "I was drowning in debt, Catherine," Patrick told me, at one point during that conversation. "I genuinely believed, when I first proposed this to Mom, that I could pay it back before it ever became a real problem, that I'd get my finances stabilized, start repaying the taxes and insurance myself, and Mom would never even need to know the full details of what had happened. I know now how genuinely reckless and wrong that plan actually was. I know I told her this was about insurance, not a loan, because I understood, if I told her the truth, she never would have agreed to it. I've thought about that specific choice every single day since this all started, and I don't have any explanation that makes it feel like anything other than exactly what it actually was. I want to describe the specific, urgent legal work Robert undertook to actually stop the pending foreclosure proceeding, given the genuinely tight 60-day timeline the original notice had established. Robert filed an emergency motion challenging the foreclosure's underlying validity, arguing that my mother's original consent to the reverse mortgage had been obtained through fraud and material misrepresentation. Given the evidence that she had been told the transaction concerned an insurance policy review rather than an actual loan, evidence, Robert argued, was further supported by Patrick's compromising presence throughout the supposedly independent counseling session. The court granted a temporary stay of the foreclosure proceeding, pending a full evidentiary hearing on the underlying fraud allegations. A genuinely significant, if not yet final, victory that gave our family the breathing room needed to work toward a fuller resolution. Robert also worked, simultaneously, to negotiate directly with the lending company itself, given that, regardless of the underlying fraud question, the company held a genuine, legitimate financial interest in recovering the outstanding loan balance and accrued interest, an interest that a full, protracted legal battle over the loan's validity might ultimately delay or complicate in ways that served neither our families nor the lender's actual interests. "I want to be honest about the practical calculus here," Robert explained during our case strategy discussions. "Even if we ultimately prevail on the underlying fraud claim, establishing that your mother's original consent was invalid, we're still going to need to address the practical reality that $310,000 in loan proceeds were genuinely disbursed and genuinely spent, regardless of how fraudulently the transaction was originally structured. Our goal, realistically, is to establish the fraud clearly enough to hold Patrick personally accountable for the missing funds, while working with the lender toward a resolution that protects your mother's ability to remain in her home, rather than pursuing a purely adversarial legal battle that risks leaving her home's fate genuinely uncertain for years, while the underlying legal questions get fully litigated." The eventual resolution, achieved roughly 4 months after the original foreclosure notice, through a combination of Robert's continued negotiation with the lender and the formal legal case against Patrick, involved several distinct components I want to walk through. My mother, working with Robert and a financial advisor he connected her with, ultimately refinanced the outstanding reverse mortgage balance into a traditional, considerably more modest forward mortgage, using funds recovered through the civil judgment against Patrick, alongside a modest contribution from her own remaining retirement savings, to bring the loan into good standing and establish a sustainable, ongoing payment structure she could genuinely manage independently going forward. Patrick, facing both the civil claim Robert pursued on our mother's behalf and, separately, a criminal referral for elder financial exploitation that Robert's investigation supported with genuinely strong, documented evidence, ultimately agreed to a settlement requiring him to repay a substantial portion of the diverted funds secured against his own future income. Alongside pleading guilty to reduced criminal charges, reflecting his cooperation with the broader investigation and his acknowledgement of responsibility. I want to describe what it felt like, once this resolution was finally, formally achieved, watching my mother sign the final refinancing paperwork at Robert's office, a document that, unlike the original reverse mortgage, she now genuinely, fully understood in every detail, having insisted, throughout this entire process, on personally reading every single page multiple times before signing anything ever again. "I will never sign anything again without reading every single word myself," my mother told me after that final signing. "I don't care how long it takes, or how impatient anyone else in the room might get waiting for me to finish. I trusted your brother completely, and that trust nearly cost me the home your father and I spent our entire lives building together. I'm not going to make that same mistake again with anyone for the rest of my life." I want to describe, honestly, where my own relationship with Patrick currently stands, roughly 2 years after this entire ordeal began. I want to be honest that this has proven one of the more difficult, ongoing relationships to navigate among all the family betrayal patterns I've researched extensively for this channel's various stories. Patrick's own genuine, documented financial desperation, existing alongside a deliberate, sustained deception that very nearly cost our mother her home. A combination that leaves me, even now, uncertain exactly how to fully categorize or process what actually happened. "I don't expect you to trust me again anytime soon," Patrick told me during a recent conversation, roughly describing his own ongoing efforts, working alongside a financial counselor as part of his settlement's structured requirements, to address the underlying financial instability that had apparently driven his original decision. I think about what I did to Mom's home and to the trust our whole family always had in each other, and I don't have any explanation that makes it feel like anything other than exactly the calculated, wrong choice it actually was. I'm trying to actually understand myself well enough that something like this could never happen again, but I understand that's going to take considerably longer than any of you simply deciding to believe I've changed. Our mother has maintained a considerably more limited, cautious relationship with Patrick than I have willing to see him at broader family gatherings, but declining, so far, any of the more direct, ongoing financial or logistical involvement in her own life that had originally created the specific vulnerability he ultimately exploited. I want to describe what Robert's investigation eventually established about Gregory Vance, the loan officer whose name appeared throughout the original mortgage documentation, because his own role in this scheme proved considerably more complicit than I had initially assumed. Robert's investigation, working alongside the state's mortgage lending regulatory board, revealed that Gregory had processed the loan with what the regulatory board's own subsequent findings characterized as a pattern of inadequate verification regarding the borrower's independent understanding and consent, a specific regulatory violation distinct from, but closely related to, the broader fraud Patrick had orchestrated. Gregory, it turned out, had a documented history of processing an unusually high volume of reverse mortgage originations, involving an adult child as the primary point of contact throughout the transaction. A pattern that, on its own, doesn't necessarily indicate fraud, but that, combined with the specific circumstances of my mother's case, raised genuine questions about whether Gregory had developed a working relationship with Patrick that prioritized closing loans quickly over ensuring borrowers' genuine, independent understanding. "I want to be careful about how I characterize Gregory's specific role here," Robert told me, once this pattern had become clear. "I don't have evidence establishing that he knowingly, deliberately participated in an intentional fraud the way Patrick did. What I do have evidence of is a loan officer who prioritized transaction volume and speed over the kind of careful, independent verification his professional obligations actually required, creating exactly the environment where a scheme like Patrick's could succeed without triggering the kind of red flags a more careful, diligent loan officer might have caught." The regulatory board's investigation, once formally completed, resulted in a formal reprimand and additional mandatory training requirements for Gregory, alongside a broader review of his employer's reverse mortgage origination practices. A genuinely meaningful, if less dramatic, piece of accountability that Robert characterized as an important part of the broader effort to prevent similar situations from happening to other families in the future. I want to return to Diane Castellano, the independent reverse mortgage specialist who first helped me understand the actual mechanics of what had happened to my mother, because a broader conversation I had with her, once our case had substantially concluded, offered genuinely important, systemic context. "I want you to understand something about why cases like your mother's happen with more frequency than most people realize," Diane told me during one of our final conversations. "Reverse mortgages are specifically marketed toward and disproportionately used by an elderly population that, as a demographic, is also disproportionately vulnerable to exactly this kind of family financial exploitation. The federal counseling requirement exists precisely because regulators understood, when designing this loan product's protections, that its complexity created real risk. But that counseling requirement's actual, practical effectiveness depends entirely on the borrower genuinely completing it independently, and there's no truly robust, foolproof mechanism preventing a family member from simply inserting themselves into that process, the way Patrick did with your mother." I asked Diane what specific, practical safeguards she would recommend to other families considering this kind of loan for an aging parent. Insist on the counseling occurring entirely without any family member present, even by phone, and ask the counseling agency directly, before the session, to confirm they have a specific process for verifying the borrower is genuinely alone and uninfluenced during the call, she said. Request copies of every single document independently. Review them with your own independent advisor if possible, and build in a mandatory waiting period between the counseling session and the actual loan signing, giving the borrower genuine, uninfluenced time to reflect before finalizing anything. None of these safeguards are legally required, but they're the kind of practical, common-sense protections that could have caught what happened to your mother considerably sooner than a foreclosure notice ultimately did. I want to close with a smaller, more personal note about what this house has come to mean to my own family in the 2 years since this ordeal concluded. My own 2 children, ages 14 and 11, have grown up visiting their grandmother's house regularly throughout their entire lives, and I made a deliberate choice, once this entire ordeal had concluded, to explain to them, in age-appropriate terms, exactly what had happened and why, not to cast their uncle as a simple villain, but to help them understand, in terms I hoped might genuinely stick with them into their own adult lives, why understanding your own financial paperwork, completely and independently, matters so profoundly. Grandma trusted someone she loved to help her with something complicated, and that trust got used against her, I told my older daughter during one of these conversations. That doesn't mean you can never trust anyone with anything complicated. It means when something is this important, like your home, like your entire financial security, you always make sure you fully, completely understand it yourself, even if that takes longer, even if it means asking someone to slow down and explain something twice. My mother, for her part, has become, in her own quiet way, considerably more actively engaged in explaining her own financial decisions to both me and my children, treating what happened not as a private embarrassment to be minimized, but as a genuinely important lesson worth passing forward, deliberately and openly, to the next generation of our family. I want you to know exactly what happened to me, and exactly why, she told my children during a recent visit, in a conversation I hadn't specifically orchestrated but was genuinely moved to witness. Not because I want you to be afraid of trusting people, because I want you to understand that loving someone and verifying what they tell you aren't opposites. You can do both at the exact same time, and you should, especially when it's something this important. For every family considering a reverse mortgage or trusting someone else to manage one. If you're watching this and you, or a parent, are considering a reverse mortgage as part of your own retirement financial planning, I want to say something directly to you, informed by everything this genuinely disorienting ordeal taught my family. Reverse mortgages, used legitimately and with genuine, independent understanding, can provide real, valuable financial flexibility for seniors navigating retirement. But their specific complexity, and the federally mandated counseling process meant to ensure genuine understanding, creates exactly the kind of vulnerability my own mother experienced when a family member is present and actively involved throughout that supposedly independent process. If you or a loved one is pursuing a reverse mortgage, insist on completing the required counseling session entirely independently, without any family member present, regardless of how genuinely helpful their presence might seem in the moment, and read every single page of the resulting documentation personally, multiple times, before signing anything. And if you ever discover, as I did, an unexpected loan or financial obligation attached to a family member's property that they don't have clear, independent memory or understanding of agreeing to, take that confusion seriously and investigate immediately, rather than assuming it reflects simple memory lapse or confusion on their part. The specific 60-day foreclosure timeline our family faced left genuinely little room for delay. And I think, often, about how differently this story might have ended if we'd waited even a few additional weeks to begin taking my mother's genuine confusion seriously. My mother still lives in the house my father built additions onto with his own hands, The house where I grew up, the house she now, finally, fully and independently understands every single financial detail of. It took a foreclosure notice, a forensic accountant, and a genuinely difficult reckoning with my own brother to get her there. I'm grateful, every day, that we still had time to fix it before that 60-day window fully closed. My name is Catherine Doyle Simmons, and this has been another family hidden fight. If this story reminded you of a parent's home, a financial decision, or any paperwork in your own family that might deserve a closer, more careful look, consider this your prompt to have that conversation today. Tell us your own story in the comments. It might become a future episode. Subscribe for a new family hidden fight story every week, and we'll see you in the next one.